Stock, crypto, and options trading has large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose, and this is neither an offer to buy, sell, or recommend a particular stock, crypto, or option.
Because I'm happy. Clap along if you feel like a room without a roof. Because I'm happy. Clap along if you feel like happiness is the truth. Because I'm happy. Clap along if you know what happiness is to you. Because I'm happy. Clap along if you feel like that's what you want to do.
Good morning, everybody. Welcome to Snipers Live Trading. I hope you're happy. I was extra happy after that song, Gerardo. Thank you for that. Good morning, Ted, Jessica, Jim, Dave, Mike, Jay David. Welcome back, Jay David. There's Harvey with his hat on. I got my Dallas Cowboys hat on because they kicked the bejeebies out of the New England Patriots last night. So I'm actually really happy for the first time in 2 weeks. So around my Cowboys, Leo, Harvey, Jeff, Mike, lots of you, Daryl, Pete. Hey, everybody. Welcome, welcome, welcome. We're going to get started here in a second. And as always, the invitation is for you to, if you have any trades, stocks you're looking at, especially if they're moving pre-market or you have anything that you think is really cool, feel free to share that in the chat box. And Gerardo will bring it to the floor and we'll take a look. The other last thing I want to say is I've decided to grow a beard. I want to look like Jeff Sleppen, and I look scruffy today because I'm going to try out a beard, a small one, a little short one. I've tried like 20 times in my past, and I never get past 3 or 4 days. So we'll see what happens, but I'm trying something new. Midlife crisis? Maybe. I've had a few of them already. Here we go. Let's hop in. Let's take a look at the markets. I'm going to go to the futures here in a second. You know what I'm going to do first, though, this time? Is I want to talk to you about news, right? So today's lesson, let's call it, is around news. And as you know, with our strategies, we like to look at news. We like to find good news or bad news coupled with strong directional move. Gaps are preferred. And then we come in the morning and we snipe credit spreads when the IV's high. So we grab these high probability profits that sometimes within the same day we can pull off for a really nice gain. So I thought today what I would do is just show you some of the places that I look for news, just so you have this in slide form. You know, got a little typo there. That's because I did this at 5:30 this morning. CNBC.com is one of my favorites. I like the way they present news. It's really nice and tight, easier to digest. They do have this thing up here that I like, as you know, 5 things to know this morning. We'll look at these in a few minutes. So just some screenshots. Bloomberg.com has really great news, a little more detailed, a little deeper news from Bloomberg.com. They also have email services where they can send you market wraps and pre-market emails. I think that's free if I'm not mistaken. I can't remember. And then MarketWatch.com, which we use to find the economics calendar, also has really great news. A news service as well, so maybe consider using that one to find news. Barchart.com we like, especially when we go to pre-market movers, gappers, and news. We look for pre-market gaps with this site, and they have a whole plethora of other types of news as well. And then Finviz.com, I don't know if you know this, but they do have major news as well. And when you go into Finviz, amongst many, many other types of analysis that you can do, it's all free, by the way. Everything I've shown you is free. And Finviz is, the scanning capabilities of Finviz, as you've seen over time, are remarkable, especially given that it's all free. And then if you use Finviz, make sure you come over here on the main page and select optionable and price. So I've done that for today, and there's some news on some of the major companies here that perhaps we could check out. So with that lesson over, and if you have any other news channels that you like, please feel free to share that in the chat box, and Gerardo will share that with the rest of the room. So given that's just been established, let's hop in and take a look at the news, and then we'll look at the futures here in a minute. So this is breaking news. I just saw this just now. Tesla reported 435,000 plus deliveries for the third quarter. and production of 430,000, blah, blah. So Tesla may be a big mover this morning. We'll take a look at that. Stock futures are a little changed. Well, the big news is that our lawmakers averted a government shutdown for at least 45 days. A loan was organized by President Biden, and we have 45 days for our government to figure out the figure out the shutdown. So we got 45 days, and we'll be right back where we started. And I've looked through here today, and I don't see a whole lot here. Here's Tesla's up 3.84. Well, I'm sorry, 1.56% this morning. So we'll look at that one here in a minute. Market movers over here to the right, to the left. Nike is up 6%. We can take a look at Nike as well. And for some reason, I can't scroll. There we go. VFC up 6%. It's the first time I've actually used the market movers on CNBC. I like it. WBA, Carnival's down 5%. Maybe some, I like the bearish ones better. Bad news lasts longer than good news does. So we'll look at all of these here in a few minutes. So there's some things moving. 5 things to know this morning. Let's see. We're looking for an October rebound. Indeed, if you look at money calendar, if you have money calendar in Tom's tools, October is typically it's an all green month. Well, heck, let me show it to you. Let's take a look at, let's go into Tom's partners. Many of you are one of Tom's partners. If you go to money calendar, October is typically very bullish. It's all bright green. This is, historically speaking, October is a bullish market. Now, things differ every year, every October, and perhaps the current climate is going to override and interrupt this pattern, but it's still a pattern we should be aware of. And any bearish prognosis that we might derive should be at least muted by potential seasonality. October is typically a bullish month. Okay, so investors look for an October rebound. It's quite common that happens in October, so that makes sense. The Dow fell 3.5% in September. Money calendar, by the way. You know, it's uncanny how well this works. Let's go back to September here. This came to fruition this September, didn't it? September is typically a bearish month, and we certainly were bearish in September, to our liking and to our gain. So there's Congress avoiding a shutdown. Student loan payments resume. This is another thing that caught my eye this morning. You remember I've over the past couple of weeks, I've spoken to you about how savings has dwindled for Americans. American consumer debt is over $1 trillion. And now 40 million Americans are now going to have to start paying back their student loan payments. You know, do they have the money to do it? Some of them probably don't. So there's an impact on the markets, and you know, we could see certainly that would help inflation if people stop spending, but we may see banks under some duress. So we keep an eye on banks then. Apple's iPhone 15 is overheating. So there's apparently a software setup, software fix to fix the bug that is going to be sent out. I don't think that's going to impact Apple too much. And then next center in California. All right, Bloomberg, similar thing. Not seeing much here. It's kind of a light day for news, quite frankly. And then if we look at the U.S. economy for this week, the reports coming out, the big one is the Adp Employment report. That's a Mac Daddy report, and we want to see that number drop. Last time it was 177,000 jobs were added, and it's expected there to be 150. If you remember 2 months ago, the ADP came out super hot and it dropped the market. It's a big report. So if this number drops, we'll be in good shape, or if it's 150 or less, if it's higher, we could see further downside in the markets. Jobless claims on Thursday morning. Both of these reports are pre-market. And then the employment report, hourly wages on Friday as well in the morning. So it's you know, it's a pretty hot week, especially the ADP employment report coming up on Wednesday morning, pre-market. Now, you know, we have these community trading rooms Wednesdays, Thursdays, and Fridays. If you're in those rooms, please be sure to check the news before you go in and start trading. It's really important. Really, really important, especially if you're doing these 24-hour iron condors on the SPX. Be careful. Be careful with these reports. They can move the markets. All right, let's go into the futures now. And let me put this slide up here because I do have all the futures listed. We get new people in the snipers community quite a lot. So let's just put those up quickly. Here's the major markets that we look at. The futures symbol. And then the exchange traded fund, which is a stock that all of these have options. So these are stocks that you can either buy or sell or even trade with options. So let's go through this list and see what's up. Now, I looked at the futures last night. Here's the S&P 500. So I looked at the futures last night and they were up. I was like, all right, maybe October's starting to kick off. But even with the government shutdown averted, the markets are coming down today. Remember the head and shoulders patterns that I've talked about. I'll draw the line here just to illustrate this again. Let's just make it right about there. All right, these patterns are very, very solid. All right, so we broke down below the neckline. Here's your shoulder, here's your head, here's your shoulder. We broke down below the neckline with great enthusiasm. And then we've had a bit of a recovery. And then today, looks like we're setting lower lows. I think we're heading to the 200, is what I think. Despite what money calendar says about October, this pattern is so bearish that I would be surprised, and I'm always surprised, but I'll still be surprised if the S&P 500 doesn't hit the 200-day average right around 4,220 or so. So that's the S&P 500. Let's look at the Nasdaq. The Nasdaq. Yeah, the Nasdaq on this day here had breached its neckline of its head and shoulders pattern. And then it came back up with the recent run up in the markets, and it looks like it's poised for further downside. I'm not as convicted on this one. Tech, Nasdaq looks a little strong. It's certainly stronger than the rest of the market. So we got to be a little bit careful here and not derive a bearish prognosis just yet. Let's wait for this stock to close below the neckline and look for some volume to couple that, and then bearish prognosis down to the 200-day average, unless it doesn't go there. Let's go to the Dow. There's a head and shoulder. They're everywhere, these head and shoulders patterns. What's really cool about the the Dow Jones Industrial Average is that, yes, it breached its neckline here, but also it breached its 200-day average. And look at how many times over the last week that it's attempted to get above the 200. No. Let's get above the 200. No. Above the 200. No. And then today, futures say hit the 200, setting lower lows. So the Dow Jones Industrial Average, the 30 biggest companies in the U.S. markets, look poised for further downside. Now, there is no 200-day average here. So where do we go next? Well, you can figure out the top of the neckline. Let's see, that's 3570, 35,750, down to maybe 400, 1,500 points or so. Anyway, I can just rough it out. It's at least down to here, it looks like, for sure, and probably a bit lower. So that's where the Dow looks. I like this one we did this in, I forgot which course, which of the many courses I teach it was, but a good time to sell a long-term bear call spread on the S&P 500, maybe up here at 3,600. Of course, you'll use the diamonds. So we'll look at that as well if we decide to take a trade on this. But this is very compelling here to me. This 200-day average is held for five straight days. Looks like it'll hold today, and selling up here somewhere, or even a short-term credit spread selling maybe at the top of that bar there would be a good place to sell as well. So the Dow is under the 200-day average on a head and shoulders pattern. Technicals say jump on that. Let's look at the Russell. And we do have a credit spread on the Russell right up about here. Russell, same thing. It's well below its neckline, come down with great velocity, lots of volume, attempted a recovery. Now it's hitting its 10-day moving average, which has held as resistance, held there, and so far today, held there as well. All right, so bearish. The patterns are bearish. The patterns are all bearish. All right, let's take a look at the VIX real quick, /VX. VIX futures are up, as you would expect with the markets down. We've hit the 200 here. We were above and then below. We do have a credit spread on this one as well. Well, look at that. What about oil? Where's oil going? Well, it's going up. It's right at resistance. I'm wondering now. I don't know if we're going to keep going up above resistance. I have a soft bullish prognosis on oil. Why? Because it's been going up and it's hit this resistance level here right around 93.5 or so, 93. That day there, I was strongly bullish on oil, and then it fell back away the following 2 days. But the trend is still decidedly up. I wouldn't do anything bullish on oil until you see it above 94. This is the futures symbol. It does have a corresponding ETF, as you know. So let's make sure before you continue a bullish prognosis on oil that it is indeed, it's firmly above these peaks here. Let's call that 94. Maybe for 2 days. 2 days above 94 on /CL oil. Bullish prognosis resumes on oil, but it's at a stopping point. Let's wait. Let's let it get above here. All right, let's look at gold. What's happening with gold? Good gracious. Triangle pattern I identified last week. Lots of compression. Lots of compression right here at the apex, or whatever you want to call that, the apex of the triangle pattern. Break down below the 200, and then it's just keeping on going. The primary culprit, just so you know, is the US dollar. The US dollar is off to the moon, man. It's running hard. Looks like it's up pre-market just a little bit. So the US dollar has gotten so strong, it's tanked. Going back to the ETS now, it's tanked gold. Silver as well is in the same pattern. Here's silver futures. Look at that. Yum. It also has a triangle pattern. Maybe not quite as distinct. Yeah, we could do it this way. Just connecting the lows here. And then connecting the highs. And you can see that compression pattern, the triangle pattern. Lots of compression on the moving averages, a death cross here that just happened on the futures. Silver looks down. The ETF was quite exciting. Look at that. Look at these. This is, a bottom. It's a strong support level right around 20.5. And on Friday, silver closed well below that and looks like it's going to drop further. So when I see that, I'm like, well, oh, by the way, not quite a head and shoulders pattern. Shoulder, it is technically though. Here's a shoulder, here's a head, here's another shoulder. That shoulder needs to be below the head, and it is slightly. And then we breached the neckline on Friday. So silver or gold look like good bear call spreads, bearish credit spreads. What have I missed here? Natural gas. Our natural gas UNG ETF expired for max credit on Friday. So we're going to do another one of those this morning. Why not? It's working. Keep going. So natural gas, we'll do another one of those as well. And Bitcoin. Whoa. That's the first I saw that. Bitcoin is up. Why? Anybody know why Bitcoin is up? Could it be risk off? I don't consider Bitcoin a risk-off asset. I think it's a speculative asset. I don't trade Bitcoin. I will sell credit spreads against BITO, the ETF. That's my point of view. I don't get it. I don't get it. And but that doesn't matter if people consider Bitcoin a risk-off asset. that's all that matters really at the end of the day. So we're up big. I don't see any news. Somebody could check for me. That would be great. Bitfarms mines 411 Bitcoin in September. That's the only news for today. And I don't know if that's enough news to drive that movement, but Bitcoin is up big. So another option for us, a possibility for us, given that dramatic move up, would be go to Bitto. And Bitto hasn't opened yet, but it'll be up here. It looks like it's going to be up here around 14.5 at the open. And we can take a look at that one as well. And maybe come down here and sell. Now, I'm not too excited about this 200-day average. So if the stock's above the 200, then I might come down here and sell at 13, but not, you don't want to put on a credit spread that would require, that has a ceiling in this case. Why would you put on a credit spread where this 200-day average could hold and drop the stock back down to your short? So I don't like there to be any resistance on a bull credit spread. And I don't like any support on a bear credit spread to keep the stock from moving in the direction we would prefer it to go. Just don't do it. Find something else. But we'll see what that opens up today in just a few minutes, and maybe we do something on Bitto. So there's a lot of stuff here, a lot. When I first looked at the news this morning, I was like, oh, it's going to be a light day, but man, there's tons, always. There's tons of stuff to trade. I think I've rounded that out there. Yep. All right, let's take a quick look at our portfolio. And here's our IWM bear. Let's go through from top to bottom. We have a number of long-term credits. Hess, that's a bullish credit spread. Microsoft, bullish credit spread. UNG, bullish credit spread, expired for max profit on Friday. And the URL, long-term credit spread. Let's look at those first. It's not unusual for these to be down a little bit when you start. So here's Hess. It came down on Friday. We're down a little bit now. And the textbook way to handle these is if the stock closes below, just like a regular credit spread, actually, but you don't want to get too excited if the stock drops fast and you start losing money, because you will immediately. We're down 7% on this, but I'm a rules-based trader. And for the most part, well, not for the most part, well, I would say for the most part, because in my hedge fund world, I don't often, I have other rules I use for managing brokering butterflies, etc. But the way you handle these, very simply, is you hang in there and you get out if the stock closes below the lower break even. Could that happen? Yeah, it could. But there's many support levels under Hess to keep us out of hot water. Let's go over here to Hess, including the 200-day moving average and 150 and 145. Our short strike here is at 135. All right, so on this one, what I would likely do on this one is if the stock closes, now again, our short strike's down here. And that's where we get in, that's where we really start losing right there. So I'm going to let support do its work. 150, 145. You have to go back a bit. And then we have the 200. So if this stock breaches the 200, then that would, to me, would be a reasonable time to take an early exit, take a smaller loss. It looks like Hess wants to come down. I wouldn't expect it, though, with oil hot. If oil begins to drop, then Hess might, but I wouldn't see that happening on this oil company if oil remains high. And it's supposed to by the end, until the end of the year, because OPEC is keeping its $1 million a day barrel cut on production in place to the end of the year. At least that's what they last said. They can always change that. So be careful with that, with OPEC. They can, they'll often come out and switch directions. So I'm good. So that's my plan. Then I forget about it. Don't even put any emotional attention on it. Just follow the rules and let the system produce the result. Microsoft, put credit spread, long term. There we are on Microsoft. Let's take a look at a live chart on Microsoft. And again, we've been selling below the 200. Here's the 295 is the 200-day average. And our short strike is right below it. And that's how we've been doing these. That 200-day average is mega strong. And that's a layer of protection. Yes, we're down, but we're going to ride this out. We got 49 days left. We're going to let time do its job. Every time the sun comes up, these lines tick towards the right. So let's just follow the system. Nothing to worry about there as well. Again, I would also say on this one, a breach below the 200, a close below the 200, and take an early exit on that one as well. Just following the same rules. We'll come to the UNG trade here in a minute. We have a United Rentals long-term bull put spread. Yeah, baby. The probability of profit on this one is still 96%. The short strike is at 360. Where's the 200, you might say? That's what I want to know. And the 200 is here. So we're way down here. So we're in good shape on that one. Nothing to worry about. Just follow the rules. A breach below the 200, a close below the 200 would signal a reasonable time to take an early exit on this one, if that's what actually happens. And then we have UNG right here. This is our last long-term credit. And that thing expired on Friday. The trade plan on this one was to simply let it expire. All right. If the stock was below the short strike here at 650, we were going to take stock and then sell calls against it. So this was literally a set it and forget it. And we ended up netting 31% since August the 11th. That's nice. Real nice. So that one expired worthless, and we netted $144 on our 456 in risk. So why not do another one? Good question. And we're going to do it. IWM. This spread is now worth 6 cents. We have sold our short call at 182, right above the neckline here. So here's our neckline on the head and shoulders pattern. Let's call it 180. It attempted to get to 180 and then it fell away. So this one, again, is follow the rules. The rules are simple. Buy it back. This was like an 8-cent credit spread. I have an order in to buy this back for a penny and net your profit sooner. You don't have to take it to expiration and avoid any kind of market bounce in the event that does happen. So that one's shaping up very nicely. That's our short-term one. We also have a Mara bear call spread. Looking at that one. Yeah, baby. Strong resistance here, right at 850. It's kind of a ugly head and shoulders pattern, but it is one with the neckline. Yeah, it's not really a good one. So that one, same rules. Buy it back for a penny. Good till cancel. That'll net most of this. 21% potential. We still have 14 days. Mara is under some pressure. Okay. Now I'm going to go over here and talk about something I saw this weekend that was really cool. And there's an potential opportunity for us, although I'm not convicted that the bullish run on this stock is going to continue. So I saw this morning. Coincidentally enough, my brother sent a video of this event. But if you look at the gap ups for today, and then this is barchart.com stocks pre-market trading. And I always come here every morning, almost every morning, and I take a look at stocks that are gapping up. And now I don't see it. Las Vegas Sphere is the stock I'm looking at. I don't see it right now. It's gone. I don't know why. Let's see if it's pre-market gap ups. SP, well, we'll look at it anyway, because it's up big. I don't know why it didn't make the list. But, you know, I go down this list and then I look at the price. And I like the price to be somewhere around $10 or higher. And there's a few here to look at. I'm baffled why this. Let me show you this company I was going to play with today. Sphere. Anybody heard of the Las Vegas Sphere? Well, it's the new thing in entertainment, and it was just opened up in Las Vegas with U2. Has anybody seen this? It's this beautiful new way to do concerts. And this company was a recent SPAC, I believe. But there's this new feature in Las Vegas, this beautiful sphere. And then inside the sphere is where you can see concerts. Let me show you this a little bit. I'll have to reshare here. U2 came out with a concert, and I've heard it's just spectacular. You're immersed in the bubble. Their sphere, it opened up outside this triangle pattern. Now I'm like, I don't know if this is really going to be a money maker, but
is the sphere. Vegas.
Actually, let me reshare so you can hear the sound, because this is freaking cool. I got to share my sound. I didn't do that when I started sharing to begin with. Check this out.
This is newest, most ambitious, and most eye-catching attraction to date. And although its exterior is impressive on its own, what lies inside is actually far more interesting than you might think. Let's take a closer look. The city of Las Vegas is famous for its unique, from the Venetian to the unique skyline. But boss, it now holds the world record entertainment venue in Las Vegas.
U2 put a concert on.
Cranes in the world was transported all the way from Belgium to lift some of the heaviest
in this sphere of magic. I mean, it's incredible. And U2 is going to be doing, I think, 40 concerts in Las Vegas. And look what's happened to the stock. I mean, it is like the next level of entertainment, and the stock is off to the races. Yeah.
If you expand that list, it's number 24.
Okay. Got it. Thank you, buddy. Well, you can see here, it's up big, right? It's exciting. And the triangle pattern was there. I just don't know what their revenue model is and how they're going to make. I mean, if they're going to charge a lot for those tickets, and I'm sure they're going to be sold out from what I can tell. And so what I do now is I'm looking at this, this stock, this pattern, and I can see consolidation around the moving averages, a little tightness there. The 10-day is sloping up. We're now above the upper leg of the triangle. So I'm thinking coming in and selling underneath, and then I want to see what's available here. Now, the only thing that I don't love is the shortest term option we can sell is October 20th, an 18-day trade. I'd rather there be, that's what about 3 trading weeks. I'd rather there be only 2. So that's a little bit of a yellow flag. And then with the stock trading at 40, checking the slippage here, it's a little hot. Right now it is. It wasn't last night. And then I'm looking to see where I might want to sell. Definitely not 40, maybe 35. All right, so I'm going to turn on the vertical here. And there's not much premium. Looking there, we can get 50 cents on this spread with a risk of $4.50. It's a 5-point spread. You sell it for 50 cents. You might have to buy it back for $5. If that happens, you'd lose $4.50. 50 divided by 450 is only 11%. So although exciting and interesting, not a lot of credit for over an 18-day trade. 18 days, you want to be in the 18% range. So we're a little bit short on that. But if you find it exciting and you want to play and paper trade as much as you can, you might like that one. I'm going to this thing. It looks amazing. There's plenty of YouTube videos if you want to see the performance. Just spectacular.
I had tickets in October.
You're going, Archimedes?
Yes, $1,200 a piece.
All right, man. Yeah, take some videos for us, please. Is it YouTube? YouTube you're going to see?
Yes, they're opening.
Oh my gosh, that's beautiful, man. If you have a subscription to any of our products, paid subscription, you have access to this live feed for snipers. So I'm going to put that in there if you're interested in having a play. But it's definitely on my list too, Archimedes. I'll be getting out there by the end of the year, I expect. Okay, so that was the trade that I liked the most today. And then I went in here to major news under FinViz just to see. And we can take a look at some of these here and see what's up. Amazon. And Gerardo, do we have any stocks to look at, buddy?
Not from the chat box.
Okay, no problem. There's plenty. Just looking through this list here, and I want to see some movement, something technically interesting. Apple's iPhone 15 overheats. Kind of interesting. Is this 200-day? Yeah, I don't know. The trend is still down. I'm not going to jump in front of this train and count on the 200 holding Apple. Not a really good idea. Coinbase, what's Coinbase doing? Yeah, I don't see any good patterns. I could check the news, but Ford, nothing really happening there. So I don't know. I'm not so impressed with the news feature here in FinViz. First time checking it out. All right, so I think I'm going to pass on that. Let's take a look at UNG. Let's do it again. Let's do it again. Let's sell a put credit spread at a price we wouldn't mind owning the stock. And we've been using 650, but with the stock at 675, why don't we try 6? Can we sell a long-term 6 credit spread on UNG? Yes, we can, but is there enough money? So I've got vertical selected here. Now you could, typically you go out 60 to 90 days on these, but you can go out 35 days too, or 39 days. I'm gonna split the difference and go for a 46-day trade. If you sold the 6-5 put credit spread, you make 16 cents. And the risk in the trade is $1 minus 16 because the spread width is $1. So what's that, 84 cents? Hey Siri, what's 16 divided by 84?
16 divided
That's
by
19%. That's a 19% credit spread. I want that. I want it. I'm going to go get it. This stock is in the cellar. It's just going sideways. And if the stock dropped below 6, you take the stock and then wait for it to go back up, because that's what this stock normally does. Not too long ago, back in November, about a year ago, almost, the stock was at $24. The lowest it's ever been is 587. I'll take this at 6. It's not even 6, actually. I'll build this for you in Tom's Tools just to show you, so you can see the statistics on this sucker. I know what I want to create, so I'm just going to create it here and put in. What I just did, just to be clear, is I went to trades, edit, create, and create trade. I don't need to search. I know what I want. And then I type in UNG. And then I fill out my form. What am I selling again? I'm selling the November 17, 6-5 put spread. So then I come in here, November 17, sell the 6, buy the 5. I'll change the buy and sell here in a sec. I like to put it in order. It's just better for my OCD. I think I have that actually. And let's see what we can get here. This shows 16 cents credit right now. So let me just change this to 16 cents. Fast way to do that is just to go like this. I'm going to sell something for 16. I'm going to buy something for 0. Net credit 16. Here's our trade, our first trade for today. 19% potential return on investment. My downside break even is the short strike minus the credit of 16, which is 584. This is our cost basis. What does that mean? That means if you do take the stock at 6, because you got assigned, you still got your credit in the bank. And so then your net cost or cost basis to own the stock is 584. And 584 is lower than it's ever been. Okay, that's a good deal. How many contracts do I want to put in here? Let's do 500, which would be 6 contracts. If you do decide to own the stock, let's talk about this just for a second here. If you decide that you want to own the stock, don't make this risk too high, because if you had to buy this stock 600 shares of the stock at 6. What's that? 3,600 bucks. So you'd have to have that in your account, or at least half of it with margin. Anyway, the point is, don't do 100 because you might end up having to buy 1,000 shares of stock at 6. That's 6,000. So, you know, it's a low price stock, which is also the other part of the beauty of this is, and this is a gift. It's a gift. It's a gift. It's a gift. I'm going to follow our format. We're going to go after 6. Did I paste that in the WhatsApp live feed? I did not yet. Let me do that first. So I'm going to go after 16 cents here. We'll probably get that or something close to it. I'll take 15 or even 14 on this. Are you guys, are the markets really going to give us this again? Yeah, they are. Confirm and send. Oops, let me get my contract size correct. I want to do 6. So sell 6 of the 6 puts in November 17, buy 6, November 17, 5 puts, net credit is 16, limit order, confirm and send. Not filling just yet. No rush. You don't have to get this today, this first minute, but I want to see if I can get a fill on this. I'll drop it to 15 cents. Take it so I don't have to worry about it. Or you can set up a GTC order to catch it on a dip. No rush. Got it. I got it for 15 cents. All right, go to monitor. There it is. We got it. We sold for 21 and bought for 6. Let me put those prices in here. 21 and 6. And let's save this in our live trades. I'll put this up on the sniper boards. Everybody has access to the sniper forum, and I will place this trade filled on the forum right after we finish here today. This is gorgeous. Look at the probability of profit on this, 82% to make 17.65% on a long-term credit spread. That's really good. We take less long-term because we have higher probability. And it's just a really good trade. Really good trade. The chances
I got
of losing
16
on this
in-
are
in
very
tasty.
reduced. George?
I got 16 and tasty.
Oh, that's not fair.
Mike, I got this at 21 cents. I bought it on the September the 21st because I had I bought the stock, 3,000 stocks.
So you own the stock?
Yes, I bought it at $6.83.
Nice. And are you going to be selling calls against it? What do you think?
I don't know. I don't know how to do that.
Okay. I'll show you. And so we should talk about this because this is the trade plan. There is no exit. We're going to let it ride. We're going to let it expire. And we might end up holding the stock. So if that happens, let's go into, I'll build a risk graph with stock in it. All right. So how many shares do you have, Archimedes?
3,000.
So that would be 30 contracts. We'll talk about that in a minute. What do you remember what you paid for the stock?
Yes, I did. Was $6.63 on 9/11, and on July 24th I bought it at 7.27.
Okay, so you have 2 buy points.
Right.
I tell you what, to make it simple, let's just say that you have 3,000 shares, cost basis to 663. Yours might be slightly different since you have 2 particular orders, but I want to keep it simple for people. So this is what your stock looks like now. This is your stock risk graph. If you did indeed, your average price is 663, you're up $600 on this trade. All right, so this is a stock risk graph. And notice in the stock risk graph, you have this risk. If the stock does drop to 6 on 3,000 shares, you're down $1,700. Okay. Now, I wouldn't worry too much about that because we have super strong support right at 6 anyway. So you might go down a little bit. And when you do this kind of covered call strategy, don't worry too much about downside, at least on this one. There's other strategies called collars and things like this. But again, the prognosis here is that it's unlikely, although possible, that UNG will be below 6. And so you ride out the storm. And while you're waiting, similar to renting a house, then what you do is you start selling calls against the stock. Let's just see what we can get. Now, where do you sell the calls? Ideally, you sell them slightly out of the money. And that way, if the stock goes sideways, that call expires worthless. You could go higher at 750 if you like. But generally, what I like to do is, and I don't trade stocks, so I don't really do this, but I used to, is you come in here and say, all right, I'm going to edit this stock trade, and I'm going to give myself October. Let's say we go to October 27, and I'm going to sell. You've got 3,000 shares. So you want to sell 30 calls. One call controls 100 shares. 30 calls controls 3,000 shares. So you multiply this by 100, and then you get your 3,000 shares. So you'd sell 30 contracts of the 7 call for October 27. And that credit would be 32 cents. 32 cents times 3,000. That's quite a bit of profit. I mean, not profit, that's quite a bit of credit, right?
All right.
32 cents reduces your stock basis down to 631. You're adding credit to the trade. You're reducing your cost basis. And you can see it right there. So that's the point, is I'm selling these calls and I'm reducing my cost basis. And you're basically driving this break even further and further down. So that's the idea. And you could pull in, what's that, $900, I think? 3,000, no, it's more than that. Let me do the math here. I don't trust my math skills. I used to do math in my head, but I don't trust it anymore. 33,000 times 0.32. It's $960. I was right. $960 in your account by placing that trade. So that's a covered call, and you just do it every month.
Wow.
That's it. Yeah. The stock's at 7, then your net profit is 2,070. If you let the stock be taken from you, let me talk about that. Now at October 27, if the stock is at 7 or higher, then they will take the stock out of your account for 7. But that's still good because you'll net $2,000 of profit. If you don't want that to happen, you can buy the call back before assignment and then sell November and just keep doing that. And every time you sell, you're driving down your downside break even, which is also your cost basis.
Okay.
Yeah, so I think that's a good trade. You might even lift it up a little higher. You get less credit if you sell the 750, but I think that's a good place. Sometimes it's above, but yeah, it's on either side of it. If the stock's above 7, as you get close to expiration, you might end up selling the stock for a profit. Does that make sense?
Yes. What about Russia is selling the natural gas to China for a discount and then really jacking it up in Europe? What is that going to do to the price of natural gas in the world?
Well, I don't know the impact of China's consumption on natural gas. That would be the thing to find out. What impact does that have on the world supply and the world price of natural gas? I'd say that the news is sort of baked into the price already, and it's not really having much of an impact. It's so low already. It's so low already that I don't, that may impact, but I see no evidence of it at the moment.
Well, it's going to be cold this winter, so they're going to have to use it.
Yeah. Yeah. With the weather patterns changing so much, we might see more cold this winter than before. All right, so we've got 10 minutes. Thanks, Archimedes. I haven't covered that before in snipers, but that'll be AI transcribed. So if you want to go look at covered calls, just review the transcript at about 40 minutes in, but you can do a search on covered calls. I said it so it can be transcribed again, and go through that process again if you're one that is not quite clear on how to do covered calls.
Thank you.
Con mucho gusto. What about silver? Do we want to do something with silver here, y'all? Oh, baby. What is going on, man? Look at silver. Oh, man. Oh, here's why. Look at the US dollar. It's off to the races. It's driving down commodity prices like gold. Wow. Both gold and silver are in a triangle pattern. Like this is quite, let's get this line redrawn. Silver, I don't trust silver, I got to tell you. That sucker gaps. So I always got to be really careful when I look at silver, because it can gap. And I've gotten hurt on silver a number of times. I don't know what's up with Thinkorswim. Since Schwab took it over, it's acting weird. All right. So the compelling thing on silver here, and this is why I like silver, technically speaking, I like silver better than gold, because of this death cross and because it's breached this lower break even. I'd like to sell above the 200-day average. So technically speaking, a really good trade here would be to sell a 22 call spread on silver. So that's one option. And the other is gold. Let's take a look at gold. Now, gold is actually pretty good too. What about selling up here? There's so many lines here, so much compression. Look at this. It's busy. Death cross. Strong resistance at this upper triangle line, and the 200 and the 50. The 10-day cross is extreme. 10-day crossing, the light blue line is the 10. The purple line is the 30. Massive cross below that. If I could sell at 179, I'd be very interested in that. Let's see what we can get. I don't know yet, but we're going to find out. So let's go into the option chain for gold. Let's see about an 11-day trade. And where I would like to sell, well, I'd like to sell at 180, no lower. I might go lower. And then 179. So 179 or 180 would be ideal. But what's there? Let's see. 179. Yeah, 179, there's nothing. See that? There's zero there. Then we have to go closer. There's no money on this trade, really, until we get to 175.50. So that's as close as we can get to have it make any difference. 175.50 is right at this support level there. Interessante. But I don't feel slam dunk energy. Slam dunk energy is up here. Let's take a look at silver and see if that's any better for us. All right, on silver, let's look to sell no lower than 21.50. Silver is not that as far away from the 200. I'd like to sell at the 200 or higher. 22 or 21.50 on silver to me would be a good trade. So we'll go the same number of days out. 21. 3 cents on 47. 50 cent spread. 50 cents a max risk. Sell it for 3. If you have to buy it back at 5, that's 47. That's not even 10%. So we'd have to go lower to 20.50. That becomes more interesting. But where's 2050 on the chart? 2050, no. Nah. I mean, technically speaking, that's a reasonable place to sell, especially given this big drop, this big hard drop on silver. All right, so I think it's that's a little close for me on silver especially. So the next idea that I have would be to sell a longer term credit spread. And we can go out, let's say 46 days. And I'd like to sell up here, you know, right around 23 or higher, 23, 24, 23.50, 24. 24 would be ideal. But can we get anything for it? Let's see. Selling at 24 on silver. If I go out to November. Yeah, there's no credit there. We go out to December the 29th. That's a 90-day trade at 24. There's 11%, which isn't bad for these. 5 cents divided by, oh, I'm sorry, it's more like 6% on the 24s. What if I dropped it to 23? Yeah, 23.50 aren't available. All right, so I'm not seeing anything that's super ideal on these at the moment. Let's go to gold and try the same thing on gold. Where do I want to sell? I want to sell where I don't think gold's going to make it. 190, way up here at 190 would be as close as I'd want to get. So let's go. I'll go to 190 here. No premium. No premium. So unfortunately, you know, based on the way I like to do them, I don't see any trades that I think are super slam dunks. If you wanted to get aggressive, you could sell at 175 here, especially with this dramatic drop. But we can't really sell above the 200 for any real credit on either gold nor silver. We got 3 minutes. Anybody got stocks they're looking at? Anybody?
Are you still in the IWM from last week? Because it's
Yeah.
dropped.
Yeah, let's take a look at that. The
Because my
IWM.
auto close just hit.
You did it really?
Yep.
Oh yeah, baby. That's beautiful. Well, guess what? If you're out, do it again. Let me check my open position here. Yeah, this is the current trade. It expires Friday. And yeah, I'm at about, I see 2 cents here, Andrew, on mine. Did you, how
Yeah,
much
I
you
had an
buy?
auto close. I had an auto close at a nickel.
Okay. Yeah, the rules I'm using here on these. Let's pull it up here. Now, this isn't current price, but I'm looking to buy this back for a penny. You nabbed your, I don't know what you got as a credit. What'd you get as a credit?
15.
Okay. But yeah,
Yeah.
IWM's down here. I've got an order to buy this back for a penny, netting almost 90% of that. And those are the rules I've been using to trade these things.
Yeah, I went with it. 182, 183
Okay.
to bring the number of strikes down.
Oh, gotcha. And what do we sell here? We sold the 182. Yeah, that's another cool thing to do is if you want to reduce the number of contracts, widen the spread. If you want to maximize your return on investment, you'd keep the strikes consecutive. If you do that, you have to do more contracts to get a decent credit. So yeah, that's a smart idea, Andrew, to reduce your credit, your commission costs. But this one's looking really nice. And in the last few minutes here, another thing I would suggest taking a look at is call credit spreads for now anyway. All right, so the market is still bearish. You know, history says it goes up in October. Doesn't look like it's not doing it so far, setting lower lows. then you could just run these long-term call credit spreads.
How about an FDX for a put spread? Bull put.
What's the FCX?
FDX.
Oh, FedEx. Okay. Yeah, good question. Here's why I would say no. And this is what I was saying earlier. Yeah, you could come under and sell a credit spread under here somewhere, maybe at 250. But the stock doesn't want to go above 270. So bump, 270 is resistance. So I don't want to put a bullish credit spread on that requires that this stock break above 270 because it hasn't. It doesn't want to. Friday's action, it hit 270 and fell. So you want to wait until the stock closes firmly above 270, and then maybe come in and sell an underlying credit spread, a put credit spread. So that's the thing. Or on the downside, if there's something that will stop the stock from rising, then don't sell a put spread underneath, or vice versa. All right. So I wouldn't do one on FedEx just yet, Dan, but if it closed above 270, I would certainly think about it, but not without considering.
I was thinking with the economy going to be, it's Christmas time and they got packages like crazy going out.
Yeah, but maybe this Christmas people aren't buying as much stuff.
Yeah,
because of inflation and joblessness and lack of savings and credit card debt that's going on. I wouldn't count on the Christmas season being good for FedEx. It might, but I would be concerned about that.
Okay.
Yeah, but good question. Thanks for that's the kind of stuff you also need to be aware of. It's more important to not take trades than to take them. And so this is a good lesson for today. Make sure that the stock has room to go in the direction you want it. And if there's something to stop it from going in that direction, don't do that trade. There's plenty of other ones that you can play with. So let's just go after the penny plus weekly. And you can do a bit more fine tuning here by going after particular sectors if you like. But here on the top of the list on Dash, 91% probability of making 16% over the next 77 days. What's the stock doing now? Yeah. Maybe at 95 on this. I don't know. This is a multi-month, if not an annual high there. I don't think that stock's under super duress. So you want to find like a vampire. You want to be vampiric. Find stocks that are under duress. This one I wouldn't say is under duress. It is below the 200-day average. And it's a pharmaceutical company, and it gaps. Avoid those with long-term credits. DocuSign. There you go. That's more like it. Here's DocuSign. If I could sell above this 200, ideally up here around 64, 65, 60, that to me would be a good looking trade. 17%, 90% probability of profit on this one. Yeah, it's a little low for me. I'd want it to be higher. So let's take a look at Dash real quick here. On a live chart. No lower than 90 on this one for me. But the stock hasn't been coming down when the markets have, so that's a no. You see that? Markets have come down and end down today, and Dash is not. So I want a stock that's in trouble. Get your probability. So you could go through that list there, and you might even say, I want to look at Russell 2000 companies. The Russell is the smallest 2,000 companies, and arguably, it's certainly IWM. Yeah, it's this beautiful head and shoulders pattern. Selling up here at 200 on the IWM or any Russell 2000 stock would be a place to look. So you could do that as well and narrow your scope to an index that's under duress, and then look at some of these companies. Nope. CMC, maybe. It's now below the 200-day average for over a week. Selling up here at 58 or 60 would be interesting. Yeah, it's at 55. That could be cool. CMC, a little higher, a little higher. Let's take it up to 60. See what that looks like. Just going to lift up the strikes by 5, lifting up my short strike. Let's see what we can get. Oh, you know what I just noticed is we're past 10. So now we have the latest data, at least the open data. I'll run it again. And let's see. CPE. Nope, it's above the 200. Forget it. I want a stock in trouble. Nope. Nope. Above the 50 and the 200. Nope. PBF. Nope. Riot. Yeah, if it hadn't been above the 200, I'd say yes. Mara, I think we already have one on Mara. We have a short-term one on Mara. Yeah, it's below the 200, but coming back strong. It is in the oil sector. Be careful. Abercrombie and Fitch. Nope. That's surprising. I didn't know that was happening. SunPower. There you go. SunPower could be very interesting, especially if we could sell up close to the 200, which is around 13. SunPower's in a lot of under a lot of duress. We can't get anywhere near. Current stock price is 6, and I want to sell up here at this point at 12, and the short strike is at 7. All right, so that's a place to look right now, I would say, with the bearishness in the market, with a yellow flag that October is typically a bullish month.
And Hershey and Match.
Oh, yeah. I think Archimedes mentioned this a few weeks ago that chocolate is under a lot of pressure. The price of chocolate is going up, and Hershey's is under some hot water. So a short-term trade on this could be selling right at that peak, let's say 215 or so, maybe 210. I got my eye over here. So that's 215 would be a nice resistance level to sell at. What can we get at 215 though? Let's see here. Yeah, the slippage is gargantuan here. Not happening there on Hershey. What was the other one, Steve?
Match, MTCH.
Mm-hmm. Do you know the news on this by chance? I'll look if not. Okay. Well, Match.com's under some pressure. Let's see. HSBC initiates a hold rating on the stock, on the company. On 9/13, JP Morgan said overweight. That's probably because they have a portfolio of Match.com. Technically speaking, I don't see any news that's really bad news. Tinder, Bumble, and Hinge downloads taper off in August. So people aren't dating as much. I am. I have a couple of accounts. Technically speaking, though, it's coming down hard, Steve, totally. And although I would prefer to see some really bad news, I haven't seen any. I'd have to dig a bit further. The biggest bad news I saw is that those companies are coming down on less subscriptions or new subscriptions. So 42 would be interesting here. So yeah, it's not bad. Well, 3 cents. 3 cents on 50-cent spread, not a lot. We can try the next month out, October 20th. 7 cents for an 18-day trade on 43 cents of risk. 7 divided by 43. There's 16% there in October for 18 days. That's reasonable. I'll hop into the scanner and see if the scanner has one for us. And I'll use the short-term setting, search. And although it doesn't show one, I can still build it. So I go to option chains. Another way to do it is option chains, pick your expiration, which is the 18th. I'm sorry, October 20th, 18-day trade. And then we're going to sell the 4250s, the calls. Oops, I need more strikes here. How'd you find that one, Steve? It's a good looking chart.
I really don't remember.
Okay.
Matter of fact, I just hit my profit target. I'm out.
You already got it? All right, good.
It hit automatically. I didn't even realize it.
You made money while you weren't looking.
Yeah.
I hate when that happens. 98% probability of profit. I'd be willing to take that one for just that reason. 11%. Looks like we can get 7 now on this one, at least right now. Maybe. Naturals 3 by 7. I doubt we'll get 7. But it is interesting, especially with the probability of profit like it is. If I did 11 contracts here, or is it 12? 12. If I got 5 cents on this, so I need to do 11. I thought it was right the first time. 11.
Check your strikes, Mike. I think you're off. I think it was.
Oh yeah, I'm selling the 42. Thank you, buddy. Appreciate that. Yeah, it shows 7 cents there in Tom's tools. Probability of profit is compelling, 97%. The whole sector is down, showing 6 cents currently. Let's do 11 of these and see if we can get 6 cents. Let me reflect that here first. So it's 13% in 18 days with a probability of profit of 97%. All right, let's go see if we can get 6 cents on this. Let me post this in Tom's tool on the WhatsApp feed. There you go. See if I can get 6 here. What's the stock doing here? Let's see. Bouncing a little bit. We're selling right up here. That's a perfect place to sell. All right. I'm gonna let that sit at 6 cents. I don't know what maybe I want to go down to 5. Let's see here. If I did 5, what would it look like? %. Yeah, I'm gonna go for 6. I'll let it sit. If it fills, I'll go ahead and track it. Everybody. It shows 7.5 there. I'm not going to resubmit this. Click that little button there at the end of the line. Looks like a menu button. Cancel, replace, and just resubmit it. We'll get 6 at some stage during the day here, I think. Mid price is 7.5. Naturals 5 cents. You definitely get 5 cents now, but let's grab that extra penny. It makes a difference on a 50-cent spread. So if that fills, it'll be tracked for all of us next week. And with that, I think we're complete. Gerardo?
Correct.
Any news to share with our beloved community?
I don't think so. I think you shared pretty much everything. We have some good news for members on Wednesday, but we will let you know during your sessions tonight this afternoon with earnings at 2 p.m. and tomorrow hedge fund at 3 p.m. Eastern time.
Yeah. Hey, Paul, I like your new haircut. Sharp.
I lost a bet.
It looks good though. At least you have it.
Yeah, there you go.
That's beautiful, man. I love it. All right, just got 6 cents on the match trade, so that'll be up on the boards here later today. All right, everybody. It's always a pleasure. It's a good way to start the week. I always look forward to this call. Love you all. And we have earnings today at 2 p.m. Eastern if you're in the earnings fold. So get ready. It's earnings season is here now. This is going to be a big earnings month, so be sure to come to earnings if you're enrolled in earnings. With that, have a great day, y'all. Pura vida. See you soon.
Later. Bye.